Chapter 3, Books of Prime Entry. Now what is this Books of Prime Entry? It is a book used to list all the transactions of a similar nature before they are posted to the ledger. And one important thing to remember is that they are not a part of the double entry bookkeeping. You will see in later on this chapter that what are various books of prime entry. Now, invoice. What is an invoice? It is a document that business issues to its customers asking the customers to pay for the goods or service that the business has supplied to them. Invoice is basically nothing but a bill. Debit note. The supplier is informed of any shortages, overcharges, and faults by issuing a debit note to the supplier. A credit note is a receipt given to the customer who has returned goods which can be offset against any future purchases. Now these are various books of prime entries, that is sales journal, also called as sales daybook, and it records all sales made on credit. Purchase journal or purchase daybook, it records all purchases made on credit. Sales returns journal or returns inwards journal, it records all goods returned from the credit customers. Purchase returns journal or returns outwards journal, it records all goods returned to suppliers. Now some of the notes are that cash book includes both cash and bank transactions, and invoices and credit notes are recorded at net of trade discount in books of prime entry. What this means is that net of trade discount means after adjustment of trade discount. How to write books of prime entry. Now in the question, they will give you such phrases, that is invoice sent to customer, credit notes sent to customer, invoices received from suppliers, and credit notes received from suppliers. So therefore you need to understand and you need to recognize that this phrase, what does it represent? Therefore invoice sent to customers represents sales, credit notes sent to customers represents sales returns, invoices received from suppliers represents purchases, and credit notes received from suppliers represents purchase returns. Now what are the steps to write books of prime entry? They are: first, post each item in books of prime entry to suppliers or customers account, and then post the total of each of book entry to the sales returns, purchases or purchase returns accounts as necessary. Now note, post the total. Okay, so here is kind of the format for it. For instance, A's account, that is the customer or the supplier's account. Now sales has a credit balance because of the nominal rule. Therefore sales will be posted on the credit side, the total of it. Then sales returns, the opposite of it, therefore on the debit side, the total of it. Purchases has a debit balance because of the nominal rule, and so is posted on the debit side of the ledger, the total. And purchase returns, the opposite of it, on the credit side.